The second reason they'll have to pivot is because every 1% hike adds $285 billion a year to the deficit in interest expense. It was easy to raise rates when debt to GDP was 30%, and you could beat Paul Volcker, but now it's at 122, not so much. And you have to think about it. If you raise rates so much, who's paying that interest? Well, yeah, the taxpayers are paying that interest, but we don't collect enough revenues to pay for that. So what do they have to do to pay for the increased interest expense from the rates they rise? Is print more money. I mean, you can't make this stuff up. They're actually creating more inflation because they have to print more money to service the debt at 122% debt to GDP. If they just did nothing and waited for it to come down, they'd be in a much better situation. But it's short-termism, emotional knee-jerk. They're running the Fed like a bunch of day traders, and hopefully they'll wake up before it's too late. And as we saw with the Bank of England, even if they're in a deep slumber, eventually the credit markets will slap them upside the face and wake them up for them.